What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 21st of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to try to break down the next big narrative that everyone is chasing when it comes to Bitcoin and the crypto space, and that is the upcoming institutional wave of adoption. After a slew of different ETF proposals for a spot Bitcoin ETF to the SEC and new players in the traditional financial space building exchange plays in crypto, we've got a lot of people hoping that this is going to drive the next bull market, that essentially they are in bed with the regulators and that everything is going to go according to what they exactly want. And I understand why a lot of people feel that this is the narrative, but I want to spend some time to really give an honest breakdown of what we're really up against. And at the end of the day, narratives aside, what really matters. We've got a lot to dive into in today's video. If you guys happen to enjoy the video, consider dropping a like. It's one of the greatest ways you can support the channel. And let's go ahead and kick off the rambling. All right, I want to go ahead and talk here a little bit the price action here, because I understand why some people are excited about this. We have recouped our losses since back here on around May 9th, taking ourselves all the way back up here towards right under 29K. So roughly speaking, from those lows, you're talking about a $4,000 move in Bitcoin's price. Not a bad move, definitely not something to be ignored. But the question here remains as to whether or not, similarly back here towards early April, if we're going to get the follow through here where it really matters. So again, as we talked about the other day, we did not end up shorting Bitcoin because we didn't get a maintained red flip here on our momentum indicator. And it is clear here that right now we are not in a period of time where it's best to start going all willy-nilly and trying to bet against any upside moves. This narrative, as we talked about in the last video, can carry on for some time, and it could very well mean that Bitcoin's going to come back up here and retest towards this 31K range. The question that I know is on the minds of a lot of people, though, is whether or not this is going to carry forward a new bull market. Not many of us here care to make the trade from, say, $28,800 to 31K. It's about whether or not we're going to be able to clear through this price level here. That is the ultimate question from this point on, because if we can't clear through that level, if price doesn't have the momentum, if we don't have the market order flow that we see in every single bull market that drives through and clears through those asks on the order book and drives up prices to pretty high exponential levels, then we're not going to have another bull market. We're having yet again another short-term bump up or relief rally, whatever you want to call it. It will again confirm likely that this was a short-term move. Now again, I'm not here to speak in absolutes. This is definitely a big move here, about 9.6% here halfway through the week so far. So about a little over a 3% move per day so far. And that's definitely something to be noted here. So let's go ahead and try to understand why people are really getting excited here, right? So the big story that everyone is getting excited about is kind of twofold. First off, you've not only had the BlackRock ETF that came out, but a whole range of other, not only the ETF proposal from BlackRock, which is the largest asset manager in the world, but you also have Invesco and a whole range of other players who previously either had submitted Bitcoin spot ETFs or are now starting to enter them into the market. Invesco is a $1.5 trillion asset manager. You also have as well, if you scroll down here on watcher.guru, they talk about Wisdom Tree filing their Bitcoin ETF. So a lot of small, medium, and large sized ETF managers coming out and following suit with BlackRock in order to submit these proposals. And this is again further playing into the narrative that it's just got to be absolutely guaranteed that a Bitcoin ETF is going to be approved here. Now, I got to be honest with you guys here. I understand the emotion around that. And as it tends to be with the headlines, you start thinking about the upside scenario. You think, oh my gosh, BlackRock is doing this. If Wisdom Tree, if Invesco and VanEck maybe are resparking their ETF proposals, oh my gosh, it's got to be happening here. And they're all feeling the FOMO. They know it's going to happen. But in reality here, what you're likely seeing is the same thing that happens to investors, and that is FOMO. If BlackRock, the largest asset manager, thinks it has the esteemed ability to get approval from the SEC, why wouldn't Invesco and all these other players put together a couple of sheets of paper with a general outline within a 24-48 hour period and just submit it? Like, why not? It's such a minimal cost to the potential upside. And that's the key point here that I want to talk about, which is that at the end of the day, as we heard so many people citing that, BlackRock never gets ETFs rejected in just a few cases, this is likely still going to be one of those cases. I really don't see a situation where the SEC is going to be in open arms, like welcoming these ETFs into the market, for the broader crypto industry, at least not when it's cracking down so aggressively on digital assets at the moment. Again, I could be completely missing something here, but I gotta tell you guys, what tells me that this narrative is just simply not true or not driving kind of the long-term traffic that sustains a bull market is taking a look at the market order flow here on Multibook. Now, you guys probably know Bookmap has been a long-term partner of ours in the channel. It's one of my favorite tools to go through and try to understand what's really going on under the market structure price. And you can see here that on Multibook, which is taking a look across a whole range of liquid exchanges for the spot market, on Tether, we can see that people are unloading Bitcoin here. While price may be accelerating here in the short term, this is not what you want to see in cumulative volume delta or market order flow if we're looking for a new bull market. This to me is showcasing that, if anything, that price is, people are essentially taking advantage, selling any kind of acceleration into bid side support here. As you can see, a lot of that deceleration happened on that line of bid side support. Now again, while bid side support is great, we want to see both elements. We want to see that there's strong bid side support versus asks on heat map, which we can see again depending on how much heat here is on the map above or below price. But on top of that as well, we want to see massive market order flow. That's the real indicator of strong both institutional and retail FOMO. When we see both players in the ballpark bidding up prices, increasing liquidity, that's when we get really excited, okay? Not just simply here when price is moving higher. And this is why it's so imperative here, guys, as we re-enter into this potential resistance range, which was previous support for over a year and a half, from January 21st to around May and June of 2022, but has now been serving as resistance since that period of time back in May of 2022, for over a year now. We've got to come back to asking whether or not we could really clear through that range here. And at this point, until we can really get some confirmation for that, I don't feel much need to FOMO. I mean, we sold our altcoins at like about 33-50% premium from where valuations were at the time back in August, from where they are now, right? So we sold them at a higher premium. Yeah, Bitcoin's a little bit higher from where we sold our position. So what? It's not about chasing every single move, guys. It's not about capturing every single bit. And it's not to say that you can't dollar cost average or have some exposure to the market. But for me, I'm more of an active trader. I like to make these major swing moves. And I like to, at the end of the day, lock in profits. It's as simple as that. Everyone has their different approach to the market here, but it's not something that you should feel you need to go all in on. We've had countless narratives this year, whether it be de-dollarization and BRICS, whether it be the bank run, the Bitcoin bank run. None of these narratives actually played out. And I have a strong feeling, as much as this narrative is probably the most kind of realistic or convincing to a large degree, and that's why a lot of people are really starting to feel that this could carry on for another couple of days, maybe even be the reason for the next bull market, I think this is yet again another way where Bitcoin comes up to a premium price range here, much higher than where it was the other day, and you have people taking advantage and distributing, selling their positions, large stakeholders who are overexposed in the industry. And the market order flow is telling us that right now. Because the overwhelming reality here is, while we have this narrative of ETFs, and while we have this additional story here, which is that Citadel Securities, Fidelity, and Charles Schwab are all starting a new market, or have at least co-invested into EDX markets alongside a whole range of other angel investors and participants in the market and traditional finance. While these are exciting developments, and they will definitely be a net positive, opening a new exchange, offering new avenues of liquidity, will likely never be a net negative for crypto. You got to come back to that question of whether or not it's going to spark a new bull market. Because the reality is that the vast majority of users, traders, and liquidity that's in the crypto space right now is in Binance, in Coinbase, Kraken, and traditional crypto exchanges. And if the SEC is berating these plays and is starting to berate these platforms, it is going to kill confidence in the industry. It is not going to bring institutions to get more excited about it. And I understand the idea here that everyone's pro is, Nick, Don't you see what's happening here? Citadel, all these major TradFi players, JP Morgan, all the names that berated Bitcoin all these years, BlackRock, Invesco, all these names, they are co-opting with the SEC to take down all these players, and then they're going to introduce their own solutions into the market. It's all coordinated. It's all a conspiracy at the end of the day. And guys, while I understand that that is like probably partially true to some degree, that I mean, sure, I bet JP Morgan and BlackRock and all these players would love to see these companies die and then just be able to enter into the market. I don't really think that that is as easy as people are making it out to be, and that it's ever going to work as smooth as people believe it to be. Essentially, that they think that this is just going to be a cakewalk for these companies to do that, or that that really is their intention, when in reality they could have gotten into this market for a long period of time. They could have pushed regulators to take a stance in a certain direction. They could have told them to suppress Coinbase earlier on, Binance, all these players, preventing them from even getting so big in the first place, right? These companies have been aware of blockchain and crypto for a very long period of time. And I really just don't think these kind of hopeful narratives that people go off of, that, just because we see a crypto exchange raising from various names in the crypto space and respected ones, GSR, huge market maker, Citadel, Fidelity, Sequoia Capital, Paradigm, there's some big names here for sure. And those names do carry some degree of weight, but those same names will invest in a dozen other exchanges, many of which end up failing. Just because Citadel Securities is co-investing in an early stage exchange does not mean that it is guaranteed to take off. And for those who are betting on the altcoin space, this is not really good news, because the only 4 coins that they are planning to trade at the moment for EDX is Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Not really the exciting layer 1 or layer 2 plays that many people are interested in and putting capital in, that are valued quite high. I don't see BNB, I don't see Polygon or Matic, all right? I don't see Cardano, I don't see a lot of the layer 1 plays and layer 2 plays, Arbitrum or Optimism, that so many people are betting are going to be the next big plays for the next cycle. People are exposed to. So again, there's a lot of nuance here, guys. Like, again, at the end of the day, we really have to be realistic about what these developments mean. And I can bet you money that in the next 2 or 3 months, EDX markets won't even be a topic of discussion. Similar to how BRICS is no longer a topic of discussion. Just how the Bitcoin bank run, the banking crisis that everyone was raging about in March, no one is talking about anymore. It is a short-term narrative that enters into the news and preys on people's emotions. And that's really sad at the end of the day. I'm not saying we get everything right here, guys. And I'm not saying that we don't have like a bit of our, essentially our own message or narrative that we're trying to get across. Yeah, our message and narrative is very clear here, guys. We've been saying it since August of last year, since we sold. I'm not here to get the market to unload so I get a better cheap entry in crypto. I'm being realistic here about the fact that we are in a contractionary macro environment. We are in an incredibly high interest rate environment, an environment where M2 is contracting, or the money supply essentially, is contracting for the first time in history. We've never had this happen before. Money supply has always moved up, and we are contracting at a really steady rate. So that is a very big dichotomy from the typical 5% expansion of the money supply we see every single year. We are now regressing in that money supply. And I think the last thing that enterprise companies in the financial sector, like JP Morgan, BlackRock, all these players, really are looking to get involved in to such a high extent as people are proposing, outside of maybe just offering some products on the market, is crypto. Right? I really don't think that that is where they're putting all their cards, so to speak, and that even if these asset types, these different vehicles get approved, that it's just going to mean an absolute guaranteed bull run in the crypto space. I'll go ahead and remind people of one thing here, which is that essentially back in 2017 in December, we had the CME and CBOE futures. These were the futures contracts for Bitcoin. This news piece that drove Bitcoin to 20K was the top signal, not only because it was buy the hype, sell the news, as these things tend to be, but outside of that, futures contracts essentially helped to, I think it was the I don't care. I can't remember if it was the CEO of the CME or CBOE. He said, "We're going to tame Bitcoin's price." And the thing is that if you want the suits, essentially, you want enterprise finance to get into this space, guys, you got to be ready for the consequences, because futures contracts, ETFs that aren't exactly backed one-to-one, that aren't true spot Bitcoin ETFs, they're going to dilute this space, and they're going to dilute the Bitcoin supply and the liquidity that can potentially flow into the space. I promise you guys, it is not going to be all sunshine and rainbows. And as you can see very clearly, for those who are hoping for an altcoin cycle, EDX, all these new players coming to the market, they're playing very defensive, and they're not betting on listing a whole range of altcoins. That is going to be continued dried up liquidity from the more retail driven crowd that is focused on chasing smaller plays. Many of them are not so enticed to buy into Bitcoin or Ethereum, and even if they were, they could do it right here today. They have tons of crypto exchanges. They have GBTC. They have the Ethereum ETN product that that Grayscale offers. You have MicroStrategy, so many different plays in the miner space that you can get exposed to right now. So again, I just don't get where this argument is coming from that this is going to guarantee a new bull run. If investor sentiment is in there, if we can't break through critical price levels of resistance, how can we really have a new bull market? I'm not saying it can't be achieved, but I'm going to wait for price to tell me whether or not there's really confidence. And those levels, for me personally, guys, you don't have to follow me exactly. As I said, you can dollar cost average, do what you like. But for me personally, that's something I need to see here. I need to see that we're going to be able to actually clear through this range. I understand where some people might be coming from about hoping that this narrative plays out. And some also as well who are big crypto advocates who don't want this to happen. People are generally looking for any reason to believe the price is going to go up. And there are plenty of people out there who are going to tell you that this is guaranteed. I mean, the tweets are just everywhere. The narrative has completely flipped positive over the past couple of days. People saying it's pretty much a guarantee at this point that we're in a new bull market. But I think there's got to be a couple of people out there who tell you that's not going to be the case. And I happen to be one of them. And I'm not just saying that just to be negative or just to be bearish. I know we generally have a more bearish theme on this channel as of the last year. But it's not just, again, because, we sold our position. Because I have that cash position, and I can go into the market whenever I want, right? I have no incentive to be negative here, guys. I don't push anyone to do leverage trading, chase short-term opportunities. I want to focus on the broader cycles, right? That's, I think, the majority of us here are all about. And until I really get those cues that signal to me it's time to really go, heavily into the market, whether that be the micro, events going on in crypto, but also the macro events, which have a huge ramification now that crypto is $1 trillion plus asset class. We've got to be aware of those things, and I have to be honest with you guys, they're not looking good. They just aren't looking good. And markets can look bright and rosy in the short term, and things can shift very quickly when things start to go south, when people's expectations are no longer met. So anyways, guys, I rambled on a good amount today. If you guys enjoyed this rambling, if you enjoyed hearing the other side of the argument here, consider dropping a like. Hope you guys are having a phenomenal day wherever you are, have a phenomenal week so far, and I will see you guys on the next video this Friday. Take care, everyone, and I'll talk to you all soon.